All right, good morning, everybody. We got a light day today. The bigger issue is likely going to be later in the week. So today, no Fed speakers in the US. But we do have Fed speakers in Europe that we got to keep our eye on. One little thing worth keeping your eye on that I ran across, the New Zealand Prime Minister-elect is giving a little bit of a wink and a nod that they might do some sort of policy overhaul. If you remember what happened over in Europe not very long ago, what couple of months, they had newly elected officials come out chipping their teeth about a new policy, and the market flash crashed in Europe. It doesn't take much, right? Just a little bit of policy statement taken out of context is really all that is required to see chaos reign. So really keep your eye on New Zealand and their news. Spotify is had a leak. They're looking to cut 6% of their workforce. Of course, they haven't done it yet, which means this one's likely to be a little bit different than the others. When Google and Facebook and Salesforce, when they cut, the news was we cut, and the stock popped up. This is a rumor that Spotify is going to cut. It's news that they're going to cut, but they haven't cut yet, which means with this one, as opposed to the other ones, it could be buy the rumor, sell the news. So when the news actually does come out, don't think, oh, it's going to pop even higher, right? When they actually come out and finally announce officially that they're going to cut, that could be the point where it tanks because everybody had already run it up. So just a little heads up on that one. This one's different than the others because the rumor came out instead of the announcement coming out. It is up in the pre-market this morning just because of that rumor. Bad news is good and blah, blah, blah. So, it's still approach that one with a little bit of caution. Maybe be on the lookout for an opportunity to flip that sucker over. Tomorrow we have the non-manufacturing outlook, and then we have U.S. services PMI flash. The manufacturing survey, I mean, it has the word survey in it, a little bit of presence there. Still, keep your eye on both of those. It doesn't have as much weight as the others, right? It's still worth keeping your eye on. Inflation is sticky, and everything is pointing to it's going to remain sticky a lot longer than the market is pricing in. Even though that's what the Fed keeps telling everybody, the market still doesn't believe it. Yellen was out chipping her teeth again, pushing those treasuries. That's about all I wanted to cover on that. February 1st is the FOMC date, and we are 100% priced in for a 25 basis point rate hike. Makes sense. They haven't given us any indication that we're going to do anything else. We're at 82% for another 25 basis point rate hike in March. And there it is. They're pricing in a Fed pause May 3. A little bit of wishful thinking at this point. We do have additional auctions today at 11:30. Keep your eye on those. Watch the clock. Once we get past 11:30, it'll all lean on whatever we get from Fed speakers, right? Or ECB. So we got Europe in this topping pattern. It's only 1240 over there right now. So we have the potential for them to break to the upside here or reject. That's going to very likely have a direct impact on our pre-market at the very least. So, kind of need to keep your eye on this, see how it resolves this morning. A move back to the downside got to kind of imply, it's taking the tide out. Remember that a lot of Asian markets are closed. Now, overnight trading or trading when the markets are closed using futures, nothing's really closed anymore, right? Other than, like the futures over the weekend. But the Asian chart here, this Hong Kong rally into the close. After hitting that resistance, let's see how it plays out with the FTSE. Yeah, we are in a blackout period, but the ECB, the European central bankers, are not in a blackout period. That's why we don't have any Fed speakers. We don't. And it's why Yellen is out chipping her teeth. Every time the Fed goes into blackout, she takes their media absence as an opportunity to hit the spotlight. FOMC goes into blackout 10 days before an FOMC meeting, and we have 9 days to go, as we can see from the Market Watch tool. 9 days and 6 hours and 17 minutes. Like we usually do when we are in blackout mode, we want to keep our eye on that Nick Tamaros guy. because if the Fed wants to communicate with the public during the blackout period, they will leak through that guy. I don't know why. I don't know what makes him special, but it's a known fact. And so that's what we do, right? This guy. Earlier this morning, I posted a graph showing the volume in the SPX all moving into the front over the last few years. We're steadily on a month-to-month basis now seeing volume in the front end of the SPX at or near 50% of the daily volume. That's something you got to really be aware of. When it comes to options pricing, volatility can trump theta decay drastically. And options volatility comes from trade activity, right? It's not like volatility. Remember when we talk volatility on a candle chart? And the discussion is candle close to candle close. Volatility is movement, how far price moved from one close to the next. It's the very definition of volatility, movement. Well, when you're looking at an options chain, what is the movement that we're focused on at that point? It can't be the options price because the volatility is changing the options price, not the other way around. What's changing the volatility in the options chain is activity, how much it's bought and sold, whether it's hit at the ask and above and at the bid and below. So transactions within the options chain directly affect the volatility within that options chain. This is why the front end, the SPX options in the front can be, and very often are, a lot more expensive than farther out, even just a few days. Volume is really light this morning. We can see the cumulative overnight volume starts around midnight. Over the last week, we've been seeing below 100. Now, we had a short week, right? And this one big day was Econ, so no surprise there. But that's pretty light this morning, 76,000. Another thing that is a heads up is this very narrow range. So the reason we look at that cumulative volume is because if there's no Econ on deck, we want to know if there's anything that the market is waiting on that we didn't see in the news. The market's waiting on something. This very clearly shows the market is waiting on something. Now, it could be a lack of volume because Asia's closed. It could be. At which point we would have, donned the armor and prepared for battle for nothing. But better safe than sorry, right? I'd rather prepare for war and enjoy peace. So this really narrow stretch of price action here. This very narrow IB coupled with this really light volume in the overnight hours tells me the market's waiting on something. And we just went over the fact that there's no Econ on deck. So they're not waiting on Econ this morning. What are they waiting on? What is keeping everybody on the sidelines? What's the news that they're waiting for? I don't have an answer to that, by the way. I'm just pointing out that there clearly is something ahead of us that the street knows about and hasn't been published yet. The reason I think it could be just something simple like Asia being closed is I don't see a market maker move this morning. And if the street was under the impression that something big could happen and they were sitting on the sidelines, they would be buying up some hedging, right? They'd be getting into some hedges somewhere. We're not seeing that. So maybe I'm just a little paranoid. I don't like it, and I don't have to like it. So heads up this morning, guys. This has the capacity to catch people off sides, especially with no news on deck. We got a 1.7 average daily range, and we are in an MDP. That's a missed daily pivot. The daily pivot is all the way down here at 39.63, and we haven't touched it. Markets hit their pivot point more than 80% of the time. So when they don't hit it, it kind of stands out. There's a trade strategy that goes with that. It's not mine. I didn't make it. I didn't name it. I have nothing to do with it. If you go looking around for it, I'm sure you'll find it. It's interesting. And I don't use that trade strategy, but I do use the perspective that comes with the strategy, right? Like if you were to learn the strategy and how it lays out its argument for hitting or not hitting the daily pivot, it actually provides you with a new analysis tool, right? It's just like I'm using it this morning, recognizing that it hasn't hit that pivot yet. ADR half to the upside would be 40.20. And then we would break out of the previous week's high. And then the full ADR is 40.50. To the downside, we would go through the weekly pivot, the daily pivot, and then ADR half at 39.5. Yesterday's cash opened at 39.30, which is the cog line, and then 39.20 for the full ADR. 39.11 is another cog line, and it's right above the previous week's low. Ten-day, 30-minute volume profile. We have some resistance overhead at 40.20. We don't yet have the classic P shape, but it's getting close, right? The P shape, P is in Paul, would be really light volume down here, and then a clear classic dome shape up here. So we don't have it yet. We're getting there. If we continue to hover at this 39.85, we're going to move this point of control, and that volume will be overshadowed by the volume up here. So at the moment, a break to the downside would have a temporary tag at 39.65, and then a shallow area down to 39.20 or 39.30, the cog line, which would bring us back to the point of control. By the end of today, the volume profile is going to be a lot smaller. Just to kind of give you an idea of what it's going to look like. If we don't break through 3,900 today, this is what the volume profile will look like tomorrow. And down here will be the yellow line for the value area low, because we will have wiped out this set of candles as the day unfolds today. When we do that, we might end up in a classic D shape. There's a little discrepancy here with how much volume is at that 3970 area, and yet we didn't really spend a lot of time there. TPO shows we didn't spend really any time at all. And yet that's the second highest volume node, other than down here where we have the point of control. So that implies there's a significant level of activity sitting down here at this 3965 area. Really keep your eye on that one. If we break this zone to the downside, it's very likely we're going to get at least a first touch rejection at that 3965. Now, I say that, but we went through that area really fast the last two times we went through there, right? We overshot it and it held there. We overshot it less and it held there. Then, we hit it and broke through it and then ran right back up. It doesn't even look like it paused on the way back up. So, it's been traversed a few times, kind of loses its respect. I would still watch 3965 really close if we make that downside breakout. One promise that the market will always keep, we can't stay here. So this tight range, rather than asking me, you think we're going to break up? Should I go long? You think it's going to go down? Should I go short? Quit trying to predict it. Seriously, we're not in the prediction business. Quit trying to predict if it's going to break up or if it's going to break down. If it breaks down, we're very likely going all the way back down to 3900 area. There's plenty of room. Let it actually break to the downside and then try to get into that thing. Same thing with an upside breakout. If we actually do break out of the top, let it break out of the top and then find a long and try to get into that 40-30 area. Now, advanced traders will always like getting in long off the lows and getting in short off the highs. But advanced traders don't need someone in a live stream to point out where they're going to get in. VPOC at 40.76 and 38.91. So we've got one on each side. We're not quite in the middle, but pretty close. Right? The old phrase, don't diddle in the middle, rings true. We are in a zone. There's different ways to look at this zone. There's a micro one here. There's another one here. And yet combined, this whole thing is a zone. So it just depends on your time frame. We're 1% above the 10-day moving average. That's fine. We're not overbought yet. No big deal. These quick moves that we've had have not been enough to outrun the 10. So we're above it. We're about 1/3 of the way to a reversal, but we're not there yet. So no fear on that end. Oh, that's the 10-week, excuse me, not the 10-day. The 10-day, we're not even 1% yet. So still plenty of room. We're not overbought. We haven't moved too far, too fast, and we shouldn't try to short this market just because. I know after a big move, it feels like the right thing to do, but we haven't moved far enough to do it just because. Bloomberg mentioned the threat of a, or maybe it wasn't Bloomberg, maybe it was Seeking Alpha. They mentioned a threat of a inflation shock, that we're starting to see some inflation data coming in a little hotter than anticipated. And with the potential for the rise in energy to compound that effect, that rising cost, it's not necessarily the idea that inflation could raise its ugly head again, which, I mean, that's possible. It's more of the threat that inflation is sticky and not going to go away, and it's going to cause the Fed to beat that drum some more on the idea that, higher for longer. So this is going to cause the market to continue watching all of these data points really, really close. It's a hyper data-driven market at this point. If you're new to trading, it's not always this way. It's just the world we live in right now. It won't last. Wrong one. All right, so what we want to focus on this morning is, what are we going to do with it? We know that it can't stay here. That promise is 100% assured. So when it breaks, not if, when it breaks this range, we want to be prepared for the trade. And again, there's no reason to guess or assume which way it's going to go. LRE to go long. You can't get it any cheaper. You can't keep your risk any less than getting in long off of that low. But if it doesn't come back down there this morning to let you in, then you have no choice rather than to get in after it breaks out. Now, it doesn't mean, as soon as the candle pops up through this cloud of dust that you go long. You could look for a Busby play or something like that. It would be the idea of, when we leave this range, where are we headed? And 40-30, 40-11 is the cog line, 40-20 is the ADR half, 40-30 gets us near the top of the zone here. We'd be looking to retest the top of this zone. Watch for a fake breakout at 4,000, right? So we're talking about popping to the upside, getting right into 4,000, and then taking a rejection and dumping back down again. That would be just enough to suck up everybody, right? Bring in the liquidity and then drop it down on their head. This really looks like a draw to me. We had this discussion not too long ago, right? First we get the draw, then we get the raid, then we get the move, the real move. So if this is a draw, sucking everybody in, their stops will go on either side, right? Longs will put their stops below, shorts will put their stops above. Price will spike first one direction, gather the liquidity, and then make the real move in the other direction. The only thing that seems off about this, if it was a draw, is we don't have the liquidity underneath it. We don't have the volume. So top side, Watch that 4,000. If we get above it and through it, then 40-30 as an overshoot, 40-50, right? Because price can just shoot right past our pivot point. $3,900 is the bottom of this discussion. Watch for 39.50 to be an area of consolidated support. Not support like a handrail. We're not expecting it to actually hold price up. More of a first touch. We expect price to respond there, consolidate, pause, determine if it's going to make it through there or not, kind of like it did here on Friday. It got to that zone, it digested it, worked at it for a while, and then made it through and kept going. So kind of that same behavior. In a break to the downside, if we were going to turn around and go back up, that would be a good turning point. That's why we want to keep our eye on it, right? Just like back here where it turned around and went back up again. If you're looking for some really cheap junk, butterflies at 40.11, 40.30, 40.50, 39.50, 39.11, 39 flat. We're talking like 5-cent butterflies, right? In the SPX. So you could widen those things out, make them as expensive as you want them to be. Just keep in mind, they're very low risk, just like a gas station lottery ticket. There's a reason that a lottery ticket is only $2. It's because you're going to lose a lot. And if they gouge you for the ticket, you're not going to come back and buy another one. But when it's $1 or $2, you just shrug like, whatever, and you grab a couple, right? And you don't care too much when it doesn't work out. So make these things small, because they will lose way more often than they win. But oh boy, when they win, they cover all of your losses plus some. You just don't want a whole portfolio of this, right? This isn't what you would want to do with all of your trading capital all the time, just putting these junk YOLOs on. Because of how tightly wound we are and the lack of a market maker move and the lack of volume, there is this impression that the market is waiting on something. So another thing that you could do is go really far out of the money and buy a debit spread, buy a put debit spread, and buy a call debit spread. 10, 15 cents each. They can both lose, don't get me wrong. And depending on how far out in time you take, they can both win too. I had that at the December FOMC and CPI. So something to consider, right? One thing's for sure, we won't stay here. And this lack of movement really implies the market is waiting on something. We have a large week when it comes to Econ. Lots of earnings announcements. Looking for my own tweet. This morning, I tweeted the list of things that are on deck to report. Got some airlines in there. Those are fun little plays. Energy names, Tesla, Boeing, some chips. Microsoft. Now, some of these names have the weight, especially Microsoft, to move the market, to make a market. Especially if traders get caught off sides on Microsoft. So we'll have to, kind of proceed with a little bit of caution. And that's on Tuesday after the close for Microsoft. Wednesday, we have Tesla after the close. All right, so from the Bloomberg email this morning, they talked about 4 European central bank officials, including President Christine Lagarde, coming out today before the end of the day, making appearances. Now, she's pretty blunt, right? She doesn't get into that pal, wishy-washy kind of sort of mealy mouth. She just throws it out there, and then when reporters ask her stupid follow-up questions, she just beats them with it. So whatever statement she comes out with should be crystal clear. The market is very likely going to respond, right? She doesn't mince her words. So keep your eye on finance juice today, right? You'll know when any of these guys are speaking because it'll be flooding through their announcers. The argument for an inflation surprise, they use a different word for it, inflation shock, is a weakening dollar is fueling demand, which is fueling inflation. It's putting a pressure on commodities. If energy goes higher and it looks like energy is about to break out and make another leg up, that's going to feed into inflation. So it's not necessarily, my argument is inflation is sticky message is going to cause the market to kind of turn to the downside. Their argument is we have the setup right now for a surprise shock, big inflation number. That kind of inflation shock would definitely spark a downside move. Natural gas, 4.5% move. Bitcoin, 2%. The China names, KWEB, 1%. Now, we've seen this Friday where we had KWEB up in the pre-market, but we didn't have all of the really good KWEB names. Specifically, we didn't have Baba and Baidu, right? If you go back and replay the morning briefing, I pointed out those aren't in there. Well, look at what Baba and Baidu did Friday. So here we are again this morning. The NASDAQ has 13 names that are up at least 0.5%. KWEB is up more than 1%. And what do we see? PDD and JD, two of those China ADR names. No Baba, no Baidu, Neo. Only 6 names in the S&P are up at least 0.5% this morning. And a lot of them are the monsters of tech: Amazon, Nvidia, and Tesla. So 50% of them are the monsters of tech. And there are a lot of chip names: AMD, Nvidia, Qualcomm. What an odd group. Let's flip it over and look at things in the other direction. 11% of the NASDAQ this morning is down 0.5%. Big, bulky software companies. And 6% of the NASDAQ is down or the S&P is down 0.5% this morning. Very odd list of names. So the main thing that's standing out is we got to have this range break. This is really scattered. It's kind of all over the place. A little bit of news on Amazon. They launched a dedicated air cargo network for India. In the big picture, that ought to be good. But in the near term, cost-wise, we're likely to see Amazon take a gut punch from that. It's up 1% this morning. Boeing's up more than 0.5%. New government contract. You know, the takeaway seems to be, let this thing play out. There it is. So we're starting to get that play out. Just remember, we very often get that fake breakout, right? If this is the raid, then it's going to gather liquidity, come into that 4,000 zone, and then flip over and head the other way. All right, the VIX has not yet broke this low. It needs to break this low if we're going to trust this breakout in the S&P. Otherwise, look for the VIX to bounce and the S&P and the NASDAQ to reject. Right? With that, we don't have anything in the dollar yet. Now, it's been tricky with the dollar lately, right? We've seen many times where we should be seeing a move in the dollar one direction or another, and it doesn't, we don't get it, right? We get the dollar moving in the same direction as the S&P. So definitely need to see a confirming move in the VIX. And we want the dollar to respond to this in some way. Looking at the outcome from Salesforce, it popped on layoff news. Facebook popped on layoff news. What did those two do? So if you want a play on Amazon, which popped on layoff news, go back and look at Facebook and Salesforce and look at what happened after they reported. Look at Spotify, right? Because Spotify hasn't actually announced the layoffs. It was the rumor or a leak that they were going to announce layoffs that caused Spot to pop this morning. I'm thinking that's more of a buy the rumor, sell the news on Spotify, because it's not an actual, it wasn't the actual announcement, right? It was the leak of an announcement. But if you want to figure out what to do with Amazon, look at Salesforce and Meta and Google. Since all of those have recently done layoffs, had the same pop, well, did they keep it? Because if they didn't, there's your answer. If they did, if they continued to grind higher afterwards, then there's your answer. Nothing is really responding to this breakout. Now, with really low volume, we can see big sweeping breakouts like this simply because a big trader will absorb everything on the dome, right, and drive price. So price can move a lot farther in low volume than it can in high volume. It's why the NASDAQ is so wicky and jumps all over the place compared to the ES, right, when you're trading the futures. The NASDAQ is so illiquid that even a 5 or 6 contract trade can move price multiple points just trying to find some liquidity on the dome. But we're not seeing anything out of the dollar yet. And the TNX broke upward. And the TLT broke down. So the good news is we're out of that range. Now we can start looking for the resolution of it. We just got into 4,000. There's our contact. Amazing how that works, isn't it? All right, so this gets us set up for one of these moves where we set something in the pre-market. And then when we get into the open, we run back up and hit our head on it and then dump. Now, I'm not saying that's what's going to happen today. So don't run out and, try to short this thing just because I pointed it out. It needs to follow through. But when we set a pre-market high like that, if we then fade off before the open, it primes us for one of these kind of plays. This makes me more bearish, not more bullish, especially since my 4,000 line held. Still need it to play out, right? So at this point, we're looking for a Busby. We have the breakout. We want to see it test old resistance as a new support and then follow through. The Busby only owes us back to the pivot point. If we go beyond that, then we're in trend mode. But if this sets our high in the pre-market and then we fade back before the open, in the open, when we run back up and test that, it very likely could be the last hurrah, right? Just like back here. And we've got multiple examples of it. It did it here. And of course, way late in the day, we rejected and dumped. And then it did it here, set those highs, and we came into the open, tested it, and down we went. Otherwise, if we can get and stay above 4,000, we're going to look to get to the top of this range. 40-30 area. Look for an overshoot. If we go to test that 40-30, we could easily run 40-50. The ADR full is 40-54, so we're not reaching at all to say that we could go to 40-50 today. No problem. Keep your eye on the clock. We have those additional auctions. It looks like the afternoon is pretty clear. Nothing really on deck in the afternoon. So once we get past those additional auctions, we should be good for any 0 days this afternoon. All right, everybody, be careful, be safe. I'll see y'all tomorrow.